So you're telling me Old Bay seasoning mixed into Unilever's mayonnaise is a $20 billion idea?
I'm just reading the press release, Nate. They call it a preeminent global flavor leader.
It's corporate condiment soup?
You're ignoring the geographic overlap. But I'm definitely not buying their culturally aligned spin. You don't smash a Maryland spice company into a European conglomerate without breaking a few jars.
Fair. Let's see if that 20 billion revenue projection actually holds up to the math. The rundown. So BRCK Group just slammed the boardroom door on Atlas Holdings, unanimous rejection at 65 pence a share.
They use the classic fundamentally undervalues the business line. I read the release. It practically had coffee stains on it from how fast they drafted it.
65 pence is a joke, Maya. Atlas was definitely bottom feeding there. Watch them come back with a sweetened offer by Friday.
Maybe, but I care more about the data center pivot. Primoris Services is dropping $422 million in cash for PayneCrest Electric.
All cash to get data center exposure.
Exactly. Every industrials company is just slapping AI infrastructure on their deals now to get a multiple bump. It's exhausting. I want to see the projected cash flows.
Oh, come on. PayneCrest actually builds the electrical systems. You can't run a server farm on vibes and venture capital. Primoris is buying real plumbing for the AI boom. I think it's a brilliant bolt-on.
$422 million is a hefty premium for plumbing, Nate. But fine, I will concede they need the exposure.
Speaking of hefty, Carlyle is taking a majority stake in MAI Capital Management, valuing them north of $2.8 billion.
Wealth management roll-ups. The private equity gift that keeps on giving.
It's a massive fee engine. And then you have Gresham House buying Mulpus Woodlands Group, creating an $8 billion forestry giant.
Wait, really? $8 billion in timber?
Literally just trees. $8 billion worth of trees.
That's actually smart. Carbon credits, sustainable materials, hard assets. I love a good timber deal. No software multiples, just wood.
You are such a nerd for hard assets. Almost as much as you love messy breakup fees, which brings me to Two Harbors. They just abruptly terminated their deal with UWM to take Cross Country's $10.80 a share offer.
Oh, the lawyers are going to have a field day with that one. I need to dig into those filings.
Do it. But look at the equity markets first. March was an exceptional month for issuance. Zurich Insurance just raised $4.98 billion to fund the Beasley acquisition.
Almost $5 billion in a primary raise. People are actually opening their wallets again.
Which is exactly the kind of market confidence you need when you are about to announce a $20 billion grocery aisle monopoly.
Right. The Spice Guys buying the Mayo Guys. McCormick is swallowing Unilever's food business whole.
I have so many questions about the valuation on this one. The big one. You don't just wake up one morning and decide to swallow Unilever's entire food division. This has been on the whiteboard for months.
Oh, absolutely. But $20 billion in projected combined revenue for 2025 is a massive number to throw out in paragraph 2 of the press release. They want you looking at the top line so you ignore the integration costs.
It's a flex. And honestly, it's the right flex. McCormick is building a global flavor empire here. They have the spice rack. Now they get the rest of the pantry.
See, this is where I get off the bus. You say empire, I say indigestion. Have you looked at the growth numbers for Unilever's food brands lately? They've been trying to offload this exact portfolio for a reason. It's sluggish.
The market analysts are already calling it a perfect continuation of McCormick's accretive M&A strategy. They know how to buy brands and optimize them.
Sure, they bought Cholula and French's and made it work. But combining a nimble spice company with a lumbering European conglomerate's food arm? The press release literally says they're uniting two culturally aligned organizations.
What, you don't think the mayonnaise guys and the black pepper guys hang out on the weekends?
I think whenever an advisor puts culturally aligned in the deck, it means they have zero hard synergies to justify the premium.
Okay, I have to push back there. Geographically, this is a masterclass. McCormick dominates North America. Unilever brings Europe and emerging markets right to their doorstep on a silver platter. It's a distribution play as much as a product play.
A distribution play that comes with massive overhead. I'm going to be listening very closely to the investor conference call today. Management needs to explain the margin drag. Unilever's food business doesn't command the same premium pricing McCormick's core spices do.
You just hate a good growth story. We'll watch the analyst upgrades tomorrow and see who's right. But honestly, my favorite part of the morning wasn't even the $20 billion spice merger.
Let me guess. The boardroom drama at BRCK Group.
The doors are slamming shut in London. Atlas Holdings comes in at 65 pence a share and BRCK just completely shut them down. Unanimous rejection. They claim it fundamentally undervalues the business.
65 pence isn't exactly a lowball if you look at their trailing 12 months. Atlas is going to have to sweeten that counteroffer if they want back in the room tomorrow.
Oh, they will. They always do. It's exactly like Two Harbors abruptly dumping UWM to take Cross Country's $10.80 offer. Loyalty only goes as far as the per share price.
Exactly. Which brings us to another space where valuations are getting incredibly aggressive right now. Carlyle is throwing around billions in wealth management.
Valuing MAI Capital at over $2.8 billion. We'll talk about why private equity is voices. I'm reading these analyst notes on the McCormick and Unilever deal, and honestly, they sound like they were written by McCormick's investor relations team. Listen to this one. Market analysts note the combination perfectly builds on McCormick's long history of accretive M&A and strategic brand building.
Perfectly built? Oh, please. Whenever an analyst uses the word perfectly, you know they're just copying and pasting from the deal deck. You don't just smash $20 billion of projected combined revenue together and call it perfect. The integration on a food business this massive is going to be a nightmare.
See, I disagree. You're being entirely too cynical. McCormick actually does have a killer track record with these bolt-ons. Sure, Unilever's food portfolio is a giant pill to swallow, but they are culturally aligned. They basically sell the exact same grocery aisle real estate.
I'll believe the cultural alignment when I see the margin retention in Q3. But fine, let's look at actual money moving. Did you see the European equity markets data? Zurich Insurance just did a $4.98 billion primary raise.
Right, to finance the Beazley acquisition. $5 billion in a single follow-on raise is wild. The banker fees on that alone could fund a small country.
Speaking of fees, the drama over at BRCK Group is escalating. They just unanimously rejected Atlas Holdings at 65 pence a share.
Oh, the board genuinely hates them. I heard they practically slammed the door in their faces. They're claiming it fundamentally undervalues the business, which is just banker speak for please pay us 75 pence.
Or look at Two Harbors in the mortgage sector. They just left UWM at the altar to pivot to Cross Country's $10.80 per share offer. Just completely ruthless.
I love a good broken engagement. It's going to be a busy morning tomorrow. We've got the McCormick investor call to parse through. Plus, we need to see if Atlas actually comes back with a sweetened offer for BRCK.
I'll be brewing a very large pot of coffee for that McCormick call. But before we get to tomorrow's fallout, we need to talk about Carlyle dropping $2.8 billion in the wealth management space. Spill the tea.
I just love a good jilting at the altar. Two Harbors didn't even send a polite text.
Pivot is a very gentle word for what they did. They flat out sprinted toward Cross Country. $10.80 a share will make you forget your previous engagements pretty fast.
You're not wrong. But the loudest slamming doors right now are over in London. BRCK Group just swiped left on Atlas Holdings.
Unanimously rejected. Atlas came in at 65 pence a share, and the BRCK board essentially laughed them out of the room. They pulled the classic fundamentally undervalues the business line.
Which is banker speak for add another 20 pence and we can talk. I actually think Atlas is going to come back. They want this asset.
Oh, come on. Look at the balance sheet. Atlas is fishing for a discount and BRCK knows it. They aren't coming back, Nate. They're going to walk.
I'll bet you a very expensive coffee they sweeten the deal by tomorrow morning.
Make it a nice matcha and you have a deal. But speaking of expensive, did you see Zurich Insurance quietly raising $4.98 billion?
Primary raise to fund the Beazley acquisition. March was just an absurd month for European equity issuance.
It's wild. Oh, and Carlyle is picking up a majority stake in MAI Capital, valuing them at over $2.8 billion. Wealth management multiples are completely untethered from reality right now.
You're just mad you didn't start a wealth management firm or a forestry fund. Gresham House is suddenly sitting on $8 billion in timberland after the Mulpus deal.
Trees, Nate. They bought trees. I prefer my assets to not be highly flammable.
Very practical of you. Well, tomorrow we're on watch for Atlas to prove me right and sweeten that BRCK offer.
Don't hold your breath. But we definitely need to watch the analyst fallout from the McCormick and Unilever merger call. I want to see if the street actually buys this $20 billion flavor giant narrative. Tomorrow's radar.
I am practically vibrating waiting for the analyst notes tomorrow on McCormick. Everyone is just blindly buying this culturally aligned narrative.
You don't buy the $20 billion flavor giant pitch.
Oh, come on. Unilever and McCormick culturally aligned? That is like saying a cruise ship and a speedboat are aligned because they both touch water.
I disagree. The geographic overlap is incredibly solid. But the real drama tomorrow is Atlas Holdings. BRCK just slammed the boardroom door on their 65 pence per share offer,
Claiming it fundamentally undervalues the business.
the classic defense. I want to see if Atlas sweetens the pot or walks away.
They will sweeten. Private equity cannot resist a stubborn board. We also need to watch Zurich Insurance pricing that $4.98 billion a raise. The syndicate desks are going to be sweating through their Patagonia vests tomorrow morning.
We will be reading those McCormick footnotes before the sun comes up. Get some sleep, Nate.